So the euro seen a bit of a bounce out from recent lows that went down to about 107.11, though the rally is classified as corrective following this latest breakdown below 107.96. At this point, look for any gains to be very well capped towards the 109 area, with a lower top side out ahead of a bearish resumption back down below the recent lows that we saw at 107.11 and towards the December base at 105.20 further down. At this point, only back above 110.60 would compromise the bearish outlook for the euro. Sterling dollar. So cable continues to extend declines with the market now just shy of that 2015 low at 145.66, which also happens to be a multi-year low. At this point, deeper setbacks are favored to test 45.66, while any rally should be very well capped towards 150. Ultimately, only back above 152.40 would compromise the bearish outlook for cable. It is worth noting, however, that daily studies are a little bit stretched, so if we do see a test of 2015 low at 145.66 in the sessions ahead, there could be room for some form of a bounce over the coming sessions. Dollar yen. So dollar yen is now broken down below next key support in the 118 area, with the market now exposed to the 116.12 August low. At this point, any rally should be very well capped, though it is also worth noting here that daily studies are oversold, which could be suggestive of some form of a bounce in the sessions ahead to allow for these studies to unwind. Ultimately, though, any rally should be well capped towards 120, with only a breakback above 123.76 to compromise the bearish outlook for dollar yen. Euro Swiss. Euro Swiss continues to trade within a very tight multi-day, multi-week, and multi-month range, though the broader recovery structure remains intact, and a break above 110.50, that September peak, is favored ahead of the next major upside extension towards 115 further up. At this point, only back below 107.15 would compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie continues to extend declines after being well capped below the 74 area, and the market is now focused on a retest of the multi-year low from back in September, just ahead of 69. At this point, any rally should be very well capped towards the 72 handle, while ultimately only back above 73.85 would compromise the bearish outlook. Dollar CAD. So dollar CAD continues to extend its gains to fresh 12-year highs, with the market now focused on a measured move upside extension towards the 142 area, which also happens to coincide with the July 2003 peak at 141.90, 141.95. At this point, daily studies are looking a little bit stretched, but there is risk for a move towards the 42 area before the market sees any form of correction. If we do see a correction, setback should be very well supported towards 138, while ultimately only back below the previous peak from September at 134.57 would compromise the highly constructive outlook for dollar CAD. Kiwi dollar. So Kiwi has done a good job of being very well capped once again ahead of 70 in the 69 area, with the latest setbacks accelerating back down towards 65. At this point, deeper setbacks are favored towards next key support, which comes in the form of the 64.30 area by those mid-November lows, with a break below to then expose the critical August spike low that we saw towards the 62 area. SPX 500. So the S&P 500 continues to extend declines as it shows the formation of a major top, with the latest breakdown below 2000 now exposing next key medium-term support in the 1870 area. At this point, rally should be very well capped up towards the 2035 to 2050 area, while ultimately only back above recent highs that we saw around 2083 would take the immediate pressure off the downside. Gold. So gold has seen a significant development into Thursday trade, with the market taking out critical resistance at 1100. The break above 1100 now suggests that there is a key base in place by those recent multi-year lows at 1046, and a close above 1100 on Thursday will do a good job of strengthening this prospect and opening a further acceleration of gains, potentially that could pave the way for a move towards the 1192 area in the days ahead.